Hey everyone, welcome back to another video and welcome to my channel. So in this video, I'm going to go over something that probably a lot of you are familiar with, which is the supply and demand zone, but I'm going to show you how you need to use 4 different time frames in order to use this strategy at its most efficient way. I'm also going to go over all the signals we send out today on our Discord and how we took those trades using the same strategy. So as you guys can see, this is May 31st, which is today that I'm recording this video. So today at 10:08 in the morning, Eastern Standard Time, we send a signal about the GBP JPY, which is everyone calls it GJ. We took a short on that position, and if I scroll down, you'll see exactly my entry and exit. So we took the short here and we exited right here. We missed on a little bit of the move after we exited, but still it's fine. We took a really nice profit on this trade. So I called out the trade exactly. I send out all the time, so I do this every day on our Discord, and the Discord is completely free at no charge if you guys want to join. So I send out exactly where I enter, where my stop loss and my take profit is. Then this trade, after we sent it out at 10:08, and we took the profit on the entire position at 10:15. So it was like a 7-minute trade, and that was our first trade, and we made our profit on this trade early in the morning. Now the next trade that we took was on gold. I was looking to short gold, and we took this short here. The stop loss was above the wick of this 5-minute chart. But if I scroll down here, so this is what I was seeing on, it was gold was trading into supply zone, so that's why I took a short on this trade. And unfortunately this trade, it hit our stop loss before it went in our favor. The trade went in our favor eventually later in the day, but it stopped us out before that. But keep in mind, I mentioned that gold looking good for short, but this trade is a riskier one because I was not having the best entry that I was looking for. So I said I'm going in with half of my usual size. So this loss was very minor compared to what we made earlier on the pound Japanese. Then later on the day, we took a trade on USD Canadian long. So this trade, at 11:25 a.m. I said keep USD Canadian on watch, might open a long, but we'll notify you. So later at 11:34, around 9 minutes later, I opened this long position, and I again set my price, entry price, stop loss, and my take profit. And this trade, guess what? It went in our favor after a 15-20 minutes, and we made a decent profit. The total profit that I personally made on these 3 trades in total was $1,943 in profits. Now without further ado, let's move on to the charts. So here I'm on the pound Japanese, GBP Japanese, which was our first call out. So the way this trade worked, so the strategy that I'm about to explain is basically I go on the 4-hour time frame. So on this particular trade, I had a supply zone on the 4-hour time frame. Then I went down on the 1-hour time frame. So these are the 4 time frames you need to check out before taking any trades. If you want to take your trades at a high probability and a high win rate, this is exactly what you need to do every time when you take a trade. So you go on the 4-hour. If you have a, let's say, supply zone on the 4-hour, and then if we move down on the 1-hour, we also had a supply zone on the 1-hour as well. And then I moved down to the 15-minute chart, and if I look at the 15-minute chart, I also had a 15-minute supply zone. And interestingly, when I went down to the 5-minute chart, I had another supply zone on the 5-minute. That's why I took my trade right at the top of this candle, and this trade went down all the way to here. So the trade was basically, if I put a replay, it was all the way to here. So that's when we took the trade at the top, and it went down all the way down here. So the strategy that I'm basically trying to tell you is that you check out 4 different time frames. You need the 4-hour, you need the 1-hour, you need the 15-minute, and you also need the 5-minute time frame. If you see a supply zone on the 4-hour, and then you go down to the 1-hour, you also find another supply zone into that 4-hour supply zone, And same thing goes with the 15 minute and the 5 minute. You find supply zones into the bigger time frame supply zones. On the 15 minute and the 5 minute, that's the highest probability trade that you can take. So do not hesitate and pull the trigger if you have a proper risk to reward ratio. Obviously, you always got to keep your risk managed. Same thing happened on gold. But the problem with gold was that, so when I went on the 4-hour chart, I had the supply zone. And then when I went on the 1-hour chart, I had the supply zone. And I also had a supply on the 15 minute. But the problem was that when I took my entry, gold was trading at here. So I was basically late to my entry. My entry should have been somewhere up here so that I can have a wider stop loss based on the ATR that gold has on the 5 minute. So what happened was that gold came back down, went back up, and my biggest mistake on this trade, which I really regret, I had my stop loss above the wick of this candle. And what happened, because my entry was late, I got a little nervous when gold came back up. I was like, okay, if my stop loss hits, I was not feeling 100% confident, to be honest with you, taking that loss on this gold trade, because I didn't want to give back profit that I made earlier on pound. So I exited right here. So this was my exit, and even though my stop loss was right above the wick here, so that was my stop loss, but I did not respect my stop loss. And look what happened to the trade. It went in my favor. On Discord, I mentioned that my target is 1967, and look how lower it went from that target. Then the next trade we took was on USD Canadian. So US dollar, Canadian dollar, that's when we took our trade. The way we took this trade was, again, we had a demand zone on the 5 minute formed. So I basically waited for this demand zone to be formed, and it was retested. So that's when I took my entry, and look how far it moved up. And if we again go on the 4-hour time frame, we'll see on this one that we have a demand zone on the 4-hour. If I draw this demand zone here, and if TradingView works with me, all right, there we go. So we had this demand zone here, and we also, if we go on the 1-hour time frame, we have this demand zone right here. So that's our demand zone. And look how beautifully this trade worked out. And if we go on the 15-minute time frame, again, we have our demand zone that is going to be tested. So that's our demand zone again on the 15 minutes. So now if I go down to the 5 minute, I see that there is confluence on the demand zone part. So these are two great examples. One we had on the GBP, which was a supply zone, and I explained how you can use the supply zone in order to short an instrument. And USD Canadian is exactly the opposite. We have the demand zones on multiple time frames, and since they're basically like inside of each other on different time frames, that's why we took this trade, and it was a high probability trade, and it moved up very nicely. So I already took profit on this trade. It's still moving up, but I'm happy with the profits that I made. I made over $1,900 profit today, which was great for me, and I called it a day, and I mentioned this on Discord that this is going to be my last trade. I usually take somewhere between like 3 to 5 trades a day, and I usually call it a day unless market is providing me more opportunity. So again, did you guys see how I used multiple time frames in order to find my trades and have higher probability trades? What I did, again, just to recap, was that I used 4 different time frames: the 4-hour, the 1-hour, 15-minute, and the 5-minute. I used all of those time frames in order to find something in common in all those time frames. So basically, it works for support and resistance, and it works for your supply and demand zones. If you see common points, and if you see any confluence on your charts, on the instrument that you're trading, that is basically providing you with a high probability trade. And I would not hesitate and just pull the trigger as soon as I see that, as long as I have my risk management planned out. All right, I hope you guys like this video. If you guys want to see more videos like this, make sure you guys give it a thumbs up, and make sure you share this video and subscribe, and also comment down below what you want to see in the future videos. I'll see you guys in the next video.